Hi, this is Charting Man Dan of TheChartGuys.com, home of technical analysis education. Click the link for a free week trial, no credit card required, and gain access to our multiple live broadcasts daily, community chat room, educational videos, nightly watch lists, and more. Invest in your education and future and join the community today. Hello gold fans, checking in on all the time frames. We've got gold losing the 200-day moving average support, a fake out day in terms of a very clear bullish break this morning on the backs of some bullish data at 8:30 a.m., but giving back those levels by the close. So the 200-day moving average is 1267.16. We have lost that level. We see a higher high, but also a lower low. The bears are in control right now, and we'll show why on the hourly time frame. The weekly, if we can't get over this 200-week moving average resistance of 1275.41, it is going to be looking very much like a bear flag, and that's when you have a dump and then a short-term bounce with parallel support and resistance channels, and then it's a continuation pattern, which would indicate further downside. So essentially, I wouldn't say this week is the must close above week, but I would say if in the next 2 weeks we are not over 1275 with that level as support, it would be very likely that we see a bear flag and a move back down towards 1243, the low that we've seen here. So the bears are still in control, and today there's that fake out, big bull break. We knew that 1268.50 level was important. It was a multiple bottom. As soon as it broke, we saw a big pullback, and then we rejected from it multiple times. We blew right through it on that bullish reaction, but just as quickly, we gave back those gains and then some, heading down and hitting a lower low, the lowest price that we had seen since back on October 18th. So the bulls clearly need to turn these low 1270s into support. We've got resistance at 1274.35, 1274.05, 1275.10, and now another lower high at 1272.55. Little bit of a oversold bounce throughout the rest of the afternoon after the recovery, but very clearly on the 4-hour chart, we need to see the bulls up above 1279.10, the high of this bounce attempt, in order for them to be in control with a bullish MACD cross following through as well. Keep an eye on this 4-hour bullish MACD. That can be a nice indication of proof that the bulls are showing back up. But again, not seeing that on the hourly time frame yet. So here on the weekly, let's just zoom in and draw this little bear flag real quick. You would have your support line and resistance line parallel to each other. And then there's that big drop. And it would be an indication that further downside is coming. Not saying that's the pattern that is going to happen, but that is a very common pattern, and it is currently setting up in that way. So keeping an eye on the dollar, keeping an eye on gold. Let's check out these bull miners struggling at the middle Bollinger Band. So rejected by NUGT multiple days in a row. Tightening range on Friday, breaking for the bears on increasing bear volume. We did bounce off the 10-day moving average support. If we lose the 10-day moving average support, we're going to be looking to this last gap to fill. It is 1250 on NUGT, and on JNUG, that last gap is down at 1103. So we can see JNUG clearly more bullish than NUGT, as it did close above the upper Bollinger Band on Friday, and it has been holding up much more significantly. Look at the high, 1383. We set a higher high today, whereas NUGT didn't even really get close, topped out at 1478. The recent high is $15, so still about 1.5% plus shy of that level. So you've heard me say it 100 times. If you're playing the miners bearish, you are playing dust. If you're playing them bullish, you're playing JNUG. Look at here. So here's an example where it looked a little bit like a bear flag here before today, and the bulls negated that. So that's what a proof that it's not a sure thing that gold is going to continue to the downside. The pattern is setting up there, but we can see plenty of examples where that pattern has been negated in the past. So bear miners was clearly the play today from the open, seeing lots of big gains from the upside, gap down open, and filling some gaps themselves. So they are still in control heading into tomorrow, and that will remain the case as long as the low 1270s stand as resistance for gold. So we'll check back in tomorrow and see how it plays out. I appreciate you watching, and I hope you have a great night.